two things you need to know how to get rich with. One is very good understanding about risk, and second, a good awareness of how much risk you can stomach, and so anyone can be rich with Bitcoin if they can stomach the downside and hold on till it reaches the other end. So there's two views on on-chain analysis. One view is a cheat code, the cheat code, which is, well, it's an open source network and it's a visible ledger, and you want to see all the trades that are happening, which is exactly what it is. It's every single trade, which is it's not a day trader, it's an investor. One person sells out, one person buys in, and the coins move, right? Because the majority of this network is an investment network. It's a store of value network. When coins move, it's going from one investor to the other, or one investor to an exchange, one investor to OTC desk, one investor to a custody provider, so those moves are very, very visible. So that's like a cheat code. And then the other view of on-chain, which I think is now starting to die away, I think with the likes of us being more proactive in communicating, the other view of on-chain is it's snake oil. But I always felt that was great, because it would the more snake oil talk there's more ability for the people who do use that, which is I do. I trade relatively large volumes using on-chain, and the more people doing it, the less kind of alpha I will get. Everyone's doing the same trade, so you're not trading differently. So yeah, on-chain is really that. It's like a visible view into the ledger, and you're effectively looking for movements between investors and seeing their trades. And now I'm at the point where really the only thing I'm looking at, there's two things I'm looking at, but the only thing I'm looking at in a trade is to essentially look at different views of demand and supply. Where's the demand and where's the supply coming from, and where is it overwhelmingly a demand space versus it's a supply space. The other thing that I do is really, it's a great forensic tool. So if anything happens, you can look at it at on-chain and at least get a data-backed explanation of what could have happened or what is happening. Like when recently we had China ban Bitcoin for the nth time. This time it was banning the miners. So we had a mass exodus of miners, and you could look on-chain and go, oh, okay, there's a hash rate plummeting. There's a lot of miners selling now, presumably to fund their migration to new locations. So you see all this stuff happening as well. And so often reporters contact me and say, what's happening? Because this, and this. And then you can kind of look on chain, hundreds of charts and go, this, and this is the signature of what's happening. And you can wrap a narrative around it. It might not necessarily be correct, but at least there's data to support that's probable. So that's on chain. It's effectively, if you're trading equities, an analyst might go into the company and look at the books and talk to the officers in the company and talk about the next products coming out. And in Bitcoin, it's not a company. We just talk about we open up the company, which is the network, and we look at what is the fundamental activity. And of course, that stuff evolves and changes over time. So you need a good understanding of Bitcoin as a technology and all the different parts of the ecosystem. We're very accustomed to this 4-year cycle. Like a 4-year cycle of Bitcoin, you get a bull market, and then you're left with mostly a year of maybe 80% retrace. You then, you repeat the cycle again, and we've really much attributed that to the halvening, the reduction of new coins being mined and sold onto the markets gets halved, so we get this impulse of supply shock. There's less being dumped, and so the price runs up. And in actual fact, we've only had 2 cycles of 4 years. The first cycle wasn't a traditional cycle. If you look at the structure of the market, the miners didn't even sell. They were if you're in 2009, as of 2009 January onwards, you could mine it, and everyone's doing everything they could to mine the coins, and they didn't sell because first you couldn't sell, there was no markets, and then when they were available, they still didn't sell. They were still mining because they were believers. So the first cycle was not marked by any mining sell pressure.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
And it was just sheer vertical wall for years because there was very little selling, and that marked our first cycle. And it was not like any other, cycle. It was very much an outlier. It was vertical, and then we had two, what we typify as our normal 4-year cycles, where we had an accumulation range, a sell down, a very hard sell down, 80-90% or even more. I think the first one was even, it was over 90%. And then we did it again. We sold down in the 2014 era, and then we had sold down in the 2018 era. And everyone's thinking now it's going to happen again. But if you were to look at, remember the two really typical textbook perfect 4-year cycles happened powered by the halvening, which is a reduction of the mined coins being sold onto the market by half. And 2017 was the last bullish impulse we had from that, where I think it was pristine, right? As of 2018, we had our futures markets developed, and BitMEX started to take the majority of volume. And then you look at the money that they make. BitMEX, of course, trades in Bitcoin collateral, everything's Bitcoin. And so here, BitMEX is making billions of dollars. They're doing billions of dollars of trading per year, per day. Of course, what are they doing with that money? Maybe some of it's held, but a lot of it is sold to cash to pay for the operational side of things and, the founders' luxury expenses. So a lot of that money is being pulled out of the ecosystem, sold from Bitcoin to cash, and that effectively is a tax on the network and then sold to fiat. I'm going to tax anyone who's trading on BitMEX, and I'm going to sell it to fiat. It's a net sell pressure, no different from mining. Mining is a tax on the network, meaning that I'm diluting the supply, so it's a hidden tax on the network, and also a fees tax on the network who's transacting, and I'm going to sell it back onto the market to pay for my mining overhead. So those two fundamentals are no different from each other. If you're a business that's earning Bitcoin on the network and you have to sell to fiat because you're paying salaries or you're needing to do that, because we're not in a world where Bitcoin is the currency, we do sell to US dollars to buy stuff. That effectively is the supply side equation to Bitcoin, a constant supply side, unlike investors buying and selling, right? This is a constant. Like the infrastructure of Bitcoin is reliant on miners, exchanges, and now ETFs, and all the complexities of the loans markets. These are parts of the ecosystem which are businesses that, for the ones that generate income in Bitcoin, that some of that is going to be sold. And so as the ecosystem develops further, we're going to have more and more of the infrastructural sell side. And that infrastructure was very simple in 2017 and earlier. The only infrastructure really of dominance was mining. Now derivatives and options, and even Grayscale ETF charging 2% fee is 4% of the mining network and sell pressure. So when you balance that out, the halvening in a year and a bit, 2 years, I forget, that is now not going to be a halvening because you've got all this other complexity of the infrastructure that is making Bitcoins taxing taxing's harsh because they're providing services, but they're earning and then they're selling.
Do you want to know one thing about crypto? I made over 3,000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination. as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. The fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.